Okay students, now next we will learn online methods of funds transferred, that is electronic banking services. That means without carrying cash we can transfer fund from one account to another account, or we can say that payment can be made without carrying cash. There are different methods of digital payments are: Number 1, electronic fund transfer, that is EFT. Under EFT, amount can be transferred electronically through computers with having internet connections. Like bank transfers wages and salaries directly from the company account to the accounts of employees of the company. The other example of EFTs are online payment of electricity bill, water bill, insurance premium, house tax, etc. Next one is automatic teller machine, that means ATM. Automated teller machines are the machines which are installed by the banks on different points, through which consumers can anytime withdraw money by inserting plastic card known as debit card and enter by entering identification code. These machines operate for all the 24 hours. This refers to a mechanical system to withdraw money from the machine. Next one is debit card. Debit card is the plastic card which is issued by the bank to facilitate payments anytime to its holder. A debit card issued to a customer in lieu of his money deposited in the bank. The customers can make immediate payment of anything from debit card like goods or services on the basis of his debit card, provided the terminal facility is available with the seller. Next one is credit card. A bank issues a credit card to those of its customers who enjoy good reputation. Credit card is like a bank account without having a balance in it. It enables the card holders to have a overdraft facility up to a fixed limit depending upon the creditworthiness of a party. It is a type of credit facility which is provided by bank to a reputed account holder for a specific period without having balance in his account. With the help of this card, the holder can buy goods or obtain services up to a certain amount even without having sufficient deposit in their bank accounts. Next one is telebanking. Under this facility, a customer can get information about the balances in his account or information about the latest transaction on the telephone. This is the telephonic conversation between the bank and the consumers, through which consumer gets all required information at a particular point of time. Next one is National Electronic Fund Transfer, that is NEFT. This is the electronic method of funds transfer. It refers to a nationwide system that facilitates individuals, organizations to electronically transfer funds from any branch to any individual, firm or company, but the required condition is that it must having an account with any other bank branch in the country. It settles transaction in batches. That means settlements take place at a particular point of time. For example, NEFT settlement takes place 6 times a day during the weekdays: 9:30 am, 10:30 am, 12 noon, 1 pm, 3 pm, 4 pm, and 3 times during Saturday: 9:30 am, 10:30 am, and 12 noon. It is different from RTGS, real time gross settlement, that there is no minimum value for NEFT, whereas RTGS facility are available in over 72,000 branches, whereas NEFT is available in 75,000 branches of banks. Next one is RTGS, that means real time gross settlement. It is another type of electronically fund transfer system. It refers to a fund transfer system where transfer of funds takes place from one bank to another on a real time or on a gross basis. Settlement in RTGS means transactions are settled as soon as they are processed and they are subject to any waiting period. They are not subject to any waiting period. That means waiting period is very less in RTGS. The RTGS is controlled by RBI. There is no physical exchange of money. The RBI makes adjustment in the electronic account of both the banks. The RTGS system is suited for higher value transaction. That means it is suitable for fund transfer of higher value. Minimum value of transaction should be at least 2 lakh. The payment made by RTGS is final. That means it is irrecoverable. The fees of RTGS vary from bank to bank. RBI has fixed the upper limit of fees. To use RTGS, the banks must use core banking. Core banking, banks are assigned an 11-digit code.